Good morning, everyone. BC Richfield here, coming to you live from London. It's just gone 16 minutes past 1100 London time, making it the same UTC. A really big shout out to everybody joining us live today, as well as everybody that watches these on recording. It's wonderful to be back with you all. Been a few weeks since we've had a live show for a few different reasons. We had the recovery program that we were running over at the Bird Nest as well, which then rolled in to our 6th annual trading congress, where we had some absolutely amazing guests. And heard from so many of you that you found that really, really helpful. We absolutely love doing this every year. And a really, really big shout out to all of the guests that we had that came on, sharing tons of alpha and life experience as well. So how are we all doing? It's really, really good to be back live with you all. We're going to look over Bitcoin. We're going to take a little look at the traditional markets as well. I know some of you like this, some of you don't like it so much, but it is important. And for those of you that aren't the biggest fan of it, you'll be pleased to know there's no key high impact news events today. Obviously, we had a real wash of events yesterday. We had everything from retail sales, non-farm employment change, employment rate. I mean, there was flash manufacturing, there was flash services PMI. Everything was kind of hitting the fan at the same time yesterday. And we had a really, really mixed bag, which didn't really make it easy for markets to settle. We saw a little bit of turbulence through the indexes, which we'll take a look at shortly, but ultimately they're holding up pretty well, as are the Magnificent Seven, which we'll take a quick look at as well. Anyway, excuse me, we're going to start with Bitcoin. All right, so as much as we've got our zoomed out view here, I haven't even really got the weekly key levels on there, kind of made up in this area through the daily, but let me just flick those on for you just so that you can get some context from what we've been looking at. Okay, the main one being this here. All right, so if I go on to the weekly, just to give you that context, it's all about this consolidation here. All right, so the way that we're looking at the markets, we're looking at the markets either ranging, consolidating, in balance, however you look at that. Basically, price has been accepted as fair value in here, so it ping pongs around in a range, and then we wait for the market to seek excuse me, either prior value, like we had here, for example. Price sold off, failed auction, failed to kind of hold this level. Price then came back, set this new area that the market considered fair value. Really often when you see these large expansion moves like this, the market out of balance, expanding, impulse move, however you kind of look at it, it's then reaching most of the time for one of these areas of previous balance or previous fair value, right? Look at these as ranges or consolidations. So it's just the market really asking questions, excuse me, between, buyers and sellers. Ultimately, are they willing to hold that price here, and are market participants willing to pay higher prices, or is that not considered fair value and the market drops down? All right, now we didn't quite reach this area here, which in my opinion was quite bullish, but anyway, we set this level here, expanded, and quite often what you see with these is when you see these expansions, we want to see these previous areas engaged with, either see them hold, either see the market run through them pretty quickly, and it gives us a little bit of an indication. This is what we've been watching here anyway. So the black line denotes this area here. I'm going to remove the weekly levels just so that we've got a slightly clearer chart here, because we are going to focus on the daily and down, and I really want to kind of rip through quite a few charts in what's going to be a slightly shorter session today. We'll keep it probably around about 30 or 40 minutes, but please do let me know if you've got any chart requests or if you've got anything. Craigie boy, how are you doing, my friend? Nice to be back with you all. Yeah, just a lot of family stuff coming up, lots of birthdays towards the end of the year. December statistically for me isn't one of the best trading months, so it's December and late January, so that's right. I normally tire my little breaks in. But yeah, all very good, my friend. Hope you're well. Hope work is going well and not getting in the way too much. And ladies, gents, if you do have any questions or any tickers you would like me to take a look at, please pop them in there and I will take a look. So let's just pop the weekly levels off and let's really kind of dive into it, because I think we've got, I think price is at an interesting juncture here. So if you look at this prior consolidation here before we had this large breakout, price is just kind of retesting into the highs of this. Yeah, we look at this kind of whole area. Something that really, really, really helped me in my career just regarding price action. Obviously, as you know, I do go on a lot on this show about understanding traditional market behavior, about macroeconomics, where you don't need to be an expert in all of these things, but understanding these drivers will help you so much. There's some traders that do it out there exceptionally well, people like SC, EXO, for example, who are amazing. My dear friend and wonderful Bird Nest, excuse me, trading team member, the Trading Tank is another one, always really, really deep in that traditional market narrative, so that we can kind of help understand what the key drivers are in the market. Hey, brother, how we doing? Good morning. Last Wednesday before holidays. Send it. Absolutely. Buyer AWB. Working on that for you. Absolutely. On holiday till January. Very nice, Craigie boy. Well, you enjoy that, mate. You absolutely enjoy that. So what am I looking at here? Well, this was a key point. Sorry, just to finish up that point. Something that really, really helped me in my career, especially in my early career, regarding price action. So, parking all the stuff I'm normally kind of jabbering onto you about traditional markets, news, key drivers, bits and pieces like that, is, looking for the areas on the market that I really want to get involved in, right? A lot of people don't really ask that question. People kind of ask themselves, and I had a great conversation with someone yesterday, a trader, funny enough, over at Goldman Sachs, and we were talking about, you think of the resources that these guys have. And by the way, Goldman Sachs, you should really check their stats. They're an absolute monster of a trading house. A lot of these major institutions don't get a lot of credit for how good they are, but I think the calendar year so far, I think they've only had like 36 losing days, which the losing days have been around 12 to 40 million. Don't quote me on this. I would definitely check it. But all the others have been winning days, and some of their winning days have been tipping into the billions. So yeah, really, really good institutions to watch out for. They've got some amazing podcasts as well. Before anybody asks, no, I've not recently been sponsored by Goldman Sachs, but excuse me, but they have got some really good podcasts. Apologies for the coughing as well, just wearing a little bit of a winter cold at the moment. Anyway, when you're looking at price action, if you're looking at the chart, you want to be asking yourself, rather than are we bullish, are we bearish, looking at where price is reacting and then what that reaction tells you, right? So for example, as price is chopping around down here, if you're patient, and what will ultimately happen is on lower time frames, people will keep trying to get involved, and it's death by 1,000 cuts. You're just trying to catch these infinitely falling knives. But actually what we see here when we look closer is really, really interesting, right? Because if you zoom into the chart and you look through all this noise, there's actually very few areas of displacement, but the ones where we see displacement are really, really key. So what's displacement, or inefficiencies, or also known as fair value gaps? Are these gaps here in the 3-candle pattern? So the low of candle 1, in this case, obviously for a bearish gap, to the high of the wick of candle 3. And what we can see here is that they don't cross over. All right. What we often see is the market drawing back into these areas, allowing participants to step in and then continuation, unless we see them violated, right? So in this example, what do we have? Price is grinding up here. It's just begging buyers to get involved in the market, right? It's just begging them. Craigie boy, that's very good of you. Burnside, how you doing, my man? Great to have you back. Or great to be back with you. I'm not sure you actually went anywhere. So you're grinding up here and people are just looking for every excuse to get long in the market, right? So if you're looking at this, how I would look at this is, first of all, I'd be looking at the key lows and key highs, all right, and then just seeing how price reacts at them. So for example, I'm not saying the market's going to reverse here, but what I am saying is, when the market drove down, left this long wick, if you're not using anything like volume spread analysis, or even something like CVD, for example, which can be really, really, really good indication of how the volume stacks up, the cumulative volume, obviously CVD standing for cumulative volume delta, how the volume stacks up against what actually happened. So for example, like if you're seeing these massive red candles coming in, and actually price is failing to kind of displace below this level. And I mean, look at this. Huge red candle here, represented on the chart. Another big red candle here, which rightly so, long tail wick here, but kind of getting absorbed here, right? Then you see this large green candle, or white on my chart, right? A bullish candle on the chart here. You lay that over the CVD and you see it's not actually the biggest bullish candle. What that's telling us is all of that sell pressure that went into the lows, all of the aggressive selling was absorbed by passive buyers. Ultimately, then what happened was this large green candle was formed on very little bearish volume, meaning that actually the relief of the market was to the upside. However, if we're focusing on the lows, watching the reactions, we displace below these lows. Yeah. For example, a reverse example of this with these highs. First of all, we have equal highs here, which are always a great liquidity pool. So this high and this high. Look at the difference in this candle. Now, where this isn't maybe necessarily the best example is we do like to see these areas retested. However, look at the way price closed through this level, and then look what we left here. Right? We left this inefficiency, this fair value gap, right? This is where the market gets out of balance, and basically the orders are flying up. There's a failure to pay, and there's hardly any transactions happening here. What we see here is the market just kind of drops back in, gives us an opportunity, or gives an opportunity for buyers to step back in. And this is where we utilize the lower time frames. All right. The reason I just wanted to cover that very quickly and to just follow up with this bit is so that we can apply these theories, so anybody that's maybe new to the show understands it a little bit better, and maybe for anybody that's been away while I've been away. A good question that I do get asked quite a lot is if we apply the same to something like this low, people say, okay, yeah, but BC, look, man, look, this thing wicked below this low, had this great recovery here, and then this candle came in and closed just below. Well, that's absolutely fine. Look, if this wick sin comes into here, you step into a long position here, price goes up. Let's say you get stopped out and it costs you 1R here, just for argument's sake. It should always only ever be 1R because you should be using proper risk management, right? Not entirely true if you look at kind of dynamic pricing concepts of risk management, but ultimately for most people watching this, 1R is what your risk should be at its most, right? So price drives in, you see this recovery, you try and enter along this day and you get stopped out. Pricing comes back and closes below this low, right? Well, in doing this, we've got a bearish engulfing candle. So I would understand intraday traders saying, well, maybe we're targeting this low before going back up. But the best thing to do here is show patience, because realistically, if we look at it, we really want to see what the reaction is at this low. And then as soon as we fail to take that low, price then has this large expansion, this big bullish engulfing candle. Well, this is then when you can start to get involved in the market. If you then look back, you can see you're starting to set these fresh areas of demand, all right? Or an order block, for example, right? So price drives down here, we get the large expansion. We then look for this area here for buyers to support that, and that's when the market starts to move up. So they're the early stage aggressive entries that we would take based on seeing absorption at the lows. And that's even with something tricky like this, right? So ultimately, don't ever be afraid to be wrong. Trading is not about being right or wrong. It's about being profitable. Ultimately, your P&L does dictate your success in this game. Now, last thing I want to say about this before we really kind of steam through some charts is looking at this area here and this area here. Price sold off, right? We did two quite significant things here. So we had a bullish gap that was sat here, all right? What happened here was we closed below this gap, yeah? That means that, any opportunity for buyers to step in, there was plenty of opportunity here, wasn't taken, right? Using this in a small microcosm, we see the close below this, in which case you'll see these typically turn purple on my chart, meaning that we've inverted them. Then we look for this area to hold as resistance, especially if we then create a bearish inefficiency through this area, and then price comes into here. We've then got a really good and solid set of conditions to start trading with. We're either short bias based on this and the overall higher time frame structure, all right? And we've got key liquidity to the downside, right? As we highlighted earlier. So we see the move below. This isn't the moment to get involved in these moves, not in the rips. We want to see these areas retested, or we want to see these gaps form in order for price to come in. But when we're really looking for reversals, this is one key signal that we get. For the keen-eyed amongst you, you will also notice we had one here. Didn't hold particularly well, but again, look, very skinny close above that. Price comes back down. What is it doing? It's coming back down here, testing back into this area. Buyers are looking to defend this area. They do that. Then we get the bullish engulfing candle. Then what happens? We start to step our way up. Yeah. So price comes back up. then we come back down. Price then setting these fresh areas of demand, looking for price to retest into these to move higher. If you want even further confirmation than that, I would focus on the areas that hold the displacement and look at the consolidations before them. All right. So if we get rid of all of this for a moment, we look at this move off the lows, we can see this is the consolidation that led to the displacement. All right. Have a real focus on these areas. I'm just going to do it in some obnoxious color, right? Why? Because when pricing comes back up into these, if the sellers were in control of the market here and driving the market lower, ultimately price unable to gain acceptance at higher prices, or the asset unable to gain acceptance at higher prices. Remember, the market's always in an auction. For a buyer, you need a seller. For a seller, you need a buyer. Ultimately, when price starts bottoming out is when, you know, sellers aren't selling anymore, right? And then price has to make its way back to an area where market participants are able to transact. So when we step into this area and then we see price's inability to see that shock, that real drive away, like, I mean, look at this long upside wick. You can see the rejection. Patient traders were rewarded here. As price comes into here, you're just seeing this quite tight consolidation. Then we see the breakout. Ultimately, price runs higher. So the reason that I'm jabbering on about all of that, right, is because this is how we're using these prior consolidations, or certainly how I'm using them. We can see this price had this expansion, consolidation, expansion, consolidation, expansion. You can start to see the diminishing returns in here, and then notice how, yeah, you start to get, again, these violations of these gaps. I'm just going to do them in purple because we can see price comes in, starts to hold here, yeah, and again, holding into this area here, which is nice. But then look, as we sell away from this, we displace through it. And the other thing we want to be aware of here as well, if we're looking at this becomes an area of resistance too, yeah. So this was the bullish area of demand, or the order block. Price expands higher, finds buyers on its first engagement, momentum wanes, closes underneath it. Look how it then retests this area in its search for liquidity lower down, which we find at this low. All right, so if we overlay those exact same principles here and we focus on the clear and obvious, we don't need to be sitting there catching falling knives. You can see the TA that's been shared week on week, day on day within here. This is a key area of resistance. This is where, you know, we were heavily short biased, obviously, because the buyers stepped in so aggressively here to propel the market higher. We didn't actually get a retest of this area. Then look at the difference, right? If those buyers were still protecting that area, why would price just do this? You know, there's no reaction in there. There's no long downside wicks. There's no way that we're seeing absorption here. Price is just very heavy. Ultimately, we close below on this candle, reject on this candle, and then, you know, 1, 2 key rejections here. If I was just going to kind of remove this for a second, in terms of local resistance, what I'd highlighted was this. This was the last place price saw any form of support between these areas, wicked into, rejected, wicked into, rejected, wicked, 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 wicked. You can tell the story, right? So look for those clear and obvious places. Now, this was the area on this expansion that we were looking to be buyers. Yeah, we saw a really long drive down into this area, but we held the low of this candle. That's the rule, right? We don't take, or we don't predict what the market's going to do. We look for how the market reacts at key levels, right? We want as much information as we can. Trading is one of the only games in the world, or professions in the world, where we're dealing with, you know, incomplete sets of information, right? Oh, Shy, hello, brother. Sorry, I didn't see you slide in there. Great to have you back with us. So as we saw here from the arrow, we're looking for price to drive into here, but we're only looking to long back up to here, right? And we can see here as well why we're really, really interested in that. So all of a sudden, we've got a little bit of a playbook going on here. If price drives into this area, right, we start kind of holding this, yeah? Well, then we've got another playbook. And again, some of these plays, or a lot of them, are going to be intraday, right? But we can look to build positions early into this consolidation. We then get something similar here, right? And then we can look to keep trading it higher. Equal highs here, for example. I'm not sure if they actually are. As we look in, we have got this key resistance. So as we do that, it allows us to be a little bit more granular with our approach and say, okay, how do we then break this down into lower time frames and therefore find ways that we can execute? Okay, so hopefully that's been helpful to just give some context. In terms of where I think we are with Bitcoin at the moment, we're just kind of stuck in this lower range here. If we get all the info off the chart, yeah, and we look at it, there's clear rejection coming in at these. Wick, rejection, rejection, rejection. This, however, is setting, yeah, higher lows, apart from this one here, which is kind of broken down a little bit. We don't either have any real clear displacement, yeah. no clear momentum moves with gapping that we could look to see just using the price action that, you know, the market participants are willing to step in. So we need to really wait here. I mean, even if, you know, if we look at taking a volume profile on this, yeah, we can see here, point of control, dead in the middle of this range. You can just see how price is just chopping around between here. That just signifies the most amount of time spent here by market participants, and these value area high and value area low, which we can see this value area low here has got this nice volume shelf to it as well, which gives us a little bit of an indication that if we really kind of take the peak of this, which is probably this area here, you see it just peaks again at the bottom here. So even if you included that part there, we can see it drops off, not quite a low volume low, but the volume starts to diminish obviously as we come into this wick here. Well, all of a sudden, we've got a really kind of clear picture, in my head anyway, and I know that doesn't always represent a lot, you know, as to looking at this as our kind of playbook here and saying, okay, well, if we look at this as resistance, we look at this as support, the price continues to hold this and we see some lowest time frame structure recovery, the chances are quite high that we just continue to ping around in this range. So really what we want to see from here is a clean breakout, and then price start to make a move on this consolidation here. Ultimately, if price does break down here, it's quite tricky because there's a big move here, but I think this area here is what's really doing the most for price. Yeah, this is where buyers really took control of the market. This is a little bit thin, so I would assume that if we really start to lose this area here, then we're going to make a move down to the 74 region. Shay, MACD, yeah, I used to love trading the MACD on slightly higher time frames and in trending environments. MACDs, RSIs, basically everything is kind of a reimagining of volume. I think one of the things with MACD or RSI or anything like that is where they're a lagging indicator. You know, that's where things can get a little bit tricky. You know, RSI, for example, sat up in, you know, oversold. Crypto traders, ever since I've been involved in the market, well, crypto markets anyway, maybe sort of 7+ years, have always seen them being like, right, you know, RSI is oversold, bang, quick, we need to look to short the market. That thing can stay up there for ages. MACD's kind of, I do like the MACD actually, but for more kind of momentum trading, where the MACD is going to really hurt you is in areas like this. Where the MACD can be quite helpful is getting on board these trends. Yeah. So again, with anything, I would just say, make sure you're just testing the living daylights out of it, that you understand every little subtle nuance that goes into it. And again, that it's just kind of confirming maybe like a trend bias rather than it necessarily being there. I used to run some low time frame scalping execution systems with it, using higher time frame moving averages and Bollinger Bands, and then using the MACD as extra confirmation. But again, it's one of those things, if it works for you and it really does give you that little edge, sometimes the edge can be as little as giving you some extra confidence. Yeah, say, for example, you were considering shorting here, but you saw the MACD. MACD typically has, you know, these two lines coming down like this, right? So let's say that the MACD had just kind of crossed up here, yeah, for example, and you might think, and I know it probably would be a little bit further on, but then you might think, well, okay, maybe not the best place to kind of short this. Actually, the market's starting to show some divergence. This is starting to show strength, yeah. And then we've got this bullish divergence here. It can give you a little bit of extra confidence to step in. But like anything, if it gives you confidence as well, it can be a great asset, but just test the living daylights out of it. So Bitcoin's really simple. We're just kind of ranging here, really. All right. Now, again, look, this was the key thing. So as you kind of go on here, yeah, look at this. And again, look at the displacement. Look at the high energy moves down. Look at the high energy moves down. Look at the high energy moves down. If we just highlight the origin of those, yeah, so like for example this one here, we draw them across and then we say to ourselves, all right, high energy move down, what do I do? Well, I either want to be looking in this inefficiency on the way down, or I want to be trading this off. If we come up and we close above it, however, yeah, then we can look for longs. Until then, we stay, because people see this move up and people just so desperately want to be bullish. All right, again, we see this move lower here. Let me do this in a slightly clearer way. Now we see this move lower here with displacement. All right, what was causing that? It was this consolidation in here. So if we draw that across, great, price tests into this, it sells off. If we now look at it from here, we had this slightly bigger area, but the up move before the price moved away, tested into it here, and now price continues to sell off. So in terms of giving ourselves targets here and looking at this on something like the 4 hour, Well, this is what I'm really interested in here, is price kind of getting back above this area. I think if we can get above this, especially after such an aggressive drop here, then I think we do look to move higher. Ultimately, I do think that this is going to be a real teaser for price to come into these lows. So again, if we're failing to see price hold here, see how we deviated this but very quickly step back inside, kind of done similar here. But if this now fails to hold, we're simply just rejecting from this gap here. All right, price has come up, also rejected from that area of supply, sold off, retest. So now we're looking down into these lows. All right. So I know most people on here are looking for, okay, when can we get setups, bits and pieces like that. Just my best advice to everybody here is just to be patient. We've got volume on our side down here. We've got support down here from these lows. I don't really think, for me anyway, now is the time to really be kind of jumping the gun. I would much rather wait for some form of confirmation. But, you know, there's also the chance here that if we look at this, you know, lower low, lower high, higher low, if price does come back up into here and we start finding some support in this area, then this could be a good area here. I mean, in an ideal world, we would come and fill this inefficiency here. And then I think this becomes a really good buying opportunity because we've moved back inside the range here. We've failed to really displace below it or even close below it, really. So as we hold this area here, we wait for market structure to step back. Then I think, again, I would be cautious here. I'd be trading this up to the point of control, then up again to the range high and waiting to play this level to level, ultimately until the strength comes back in the market. We are in very uncertain market conditions. We're moving towards the end of the calendar year. All right, we're moving up to Christmas and obviously the Christmas shutdown. So let's always kind of keep that factored in as well. So again, Bitcoin pretty flat across most cryptos as well at the moment. Kazar, hello, my friend. Very informative live streaming. Thanks to YouTube. Just, awesome. Thank you, mate. Really, really kind of you. You too as well, Shay. So let's take a look at a couple of key others before we finish up. All right. I know this hasn't, the reason I wanted to make this a little bit education based is because of just wanting to make sure we basically haven't got much going on in in the markets at the moment, right? We can see a really, really similar kind of thing here with ETH, really big sell-off here, taking on the higher time frame. We've got this kind of range, price kind of holding the range lows in here at the moment before we're kind of looking to move up. Deviation, price steps back in, retest down to the point of control, lose the point of control, now down to the range low. However, again, if we're looking at this here, and, you know, breakers are something I really like to look at for anybody that's unaware of what a breaker is, or certainly how I see a breaker anyway, right, is in this case looking for the up close candle before price sweeps liquidity, which it takes from this low, and then a fast expansion back above it. These areas here, I really like to kind of trade these as areas of retest. And again, like something like this, again, we're looking for price to come up. Price comes back to here, often presents a good buying opportunity. If it really slices through it, look for it to become resistance and then trade it down into the lows. All right, so this is definitely an area of interest for me. This is starting about the 2841s, that kind of region here on Binance. So, you know, maybe something like this would actually be a dream because we've got the value area low here. So price had a really sharp move back and a sharp reclaim inside this area. I'd probably be a little bit tempted to feel out for some long positions here. All right, but actually where I'd be really game to take this on is here. All right. Really zoom in on this. We've got this tight consolidation happening here. We've had a run at the range, though. We're starting to build these long downside wicks. CBD not really telling us tons at the moment. Well, it is actually, because look at the sell pressure that came into here and how the CBD set a lower low here compared to this low. Yeah. So look at this low up here compared to this low down here. That's higher on here. This is lower. All right. So as we're looking at this, we're saying, okay, a lot of selling effort went into here. Those sellers got absorbed, all right, by passive buyers, and price is ranging here. So a really nice trade out of this would be to see quite clean breakout retest of this range high level, or if someone that doesn't really use volume, then have a real focus on the wicks. Yeah. If that's where the key absorption happened, then, you know, if you see price get a good close through here, yeah, minimum upside wick or no upside wick, then we look for the retest to trade that higher. All right, I didn't mean for that to look so phallic, but yes, Jack, yes, as our Polish friends would say. All right, I certainly can, mate. Let's take a look over at Solana for you. Beautiful. Okie doke. So let's have a look what we've got on here. Clear this up. Right, so firstly, zooming out here, excuse me, on the weekly, actually, good example here on the weekly, just, price ultimately is fractal. So we're looking for the same kind of mechanisms on all charts. Let me just get rid of this. Right. Remember what I said, price is driving up here. Look at this efficient staircase pattern. We've reclaimed market structure here as we break above, and then we're respecting the bearish candles as price continues to move up until we don't. Again, look, this is the first key displacement move, yeah? Not much gapping in this move higher. Price closes below it here, then starts to struggle to get back above it, set this bearish engulfing, and then all of a sudden the dynamic changes aggressively from price respecting the bearish candles on its way up to price now rejecting the bullish candles on its way down, yeah? And really, really, really simple dynamics can really, really help a lot. Price is kind of holding up here. And again, what I quite like about this region is this. Yeah, you can leave this in green because this is the down close candles before price shifted structure higher. And that ultimately left this retest here led to the break of structure, price stepping in to bullish formation. All right. Now, price is looking to just close below this low here, but it hasn't, right? So this would definitely, or will definitely be a key area here. Price really kind of driving into this. Again, weekly wise, excuse me, we don't have tons to go on, but we can see, larger bearish candle here on the CBD. Yeah, decent sized bearish candle here and here. Yeah. And then look, not really making any progress. Telling me sellers are getting absorbed here a little bit. Solana could be at an interesting level here on the weekly, but it doesn't really give us much else. So if we break this down onto the daily, again, I know very, very similar here. Don't really want to go broken record on you guys, right? But, we've got this range. It's not the cleanest range, deviation, but price steps in, retest, sell-off, retest, sell-off, holding the range lows, deviating the range highs. Again, a really, really simple way, if you're not somebody that uses volume, right, is look at where price is being rejected. To think of one of my favorite traders, someone I learned a lot from in this industry, from FX through into Crypto Trader SC. Two things I'll always think of him. One, the word deviation, anytime anybody uses that, in the same way that if anybody uses the C-bomb, then I think of the wonderful Tom Dante. I was actually talking to one of my students then about when I was in Tom's mentorship years ago, and just how politely and wonderfully abused you get in that, but it teaches you so much. But just, don't make life more difficult for yourself. And what SE would say is okay, what's capping the market? And you can see, right, look, rejection. So you might say, yeah, that's great with hindsight. Well, just use it for your trading now. Look, support. So again, if you really take the simple area of this, and even if you just highlight the key wicks, I like doing this to just get as many of the wicks in as possible, yeah? But try not to allow for too many of the bodies. Otherwise, it's very difficult to know. You see how this sits nicely atop the bodies here. We've got this deviation. The rest in this area are just wicks, all right? And then as you draw this back, you often find these little points of support as well in this case before it becomes resistance. So now we've got a really clear indication. We also have the big green box. If that's a bit too obtrusive for you, you can remove it. But ultimately, this big green box is telling us we're in a weekly area of demand, right? So price is driving into this and it's finding buyers. If we get the CVD on, let's have a look on here as well. Look, now this is interesting because price is setting a lower low here where it hasn't, I don't think here, just. There's the tiniest little bit of divergence here. So again, price, a lot of selling effort coming into here, and price is at the moment winning that battle. However, if we want to break this down, remember, we need to allow for the lows as well. So again, if I want to get the maximum amount of wicks in here, and there is nuance to this. I think every trader will do this slightly differently, right? You can either include all of the wicks down to this area here, which is fine. If it's too large an area for me, I typically just try and get the majority, all right? So again, I know that can be a little bit loose, but just being honest with you guys, it's not a perfect science. It doesn't have to be because these areas don't need to be pinpoint. The key thing here is when you typically see breakouts of these type of areas, yeah, you normally see large displacement, right? Or you normally see a strong move. For example, this, with the support here, I hadn't allowed for that lower wick there, but by allowing for the majority of the wicks, look at the move. The aggressive move down tells you sellers are there, and then we typically wait for that retest back in to then short the market. All right. Hey, Aussie Gromy, how we doing, brother? I hope you've been keeping well. Hope the family are well. Looking forward to Christmas. So again, we've kind of got this range here on Solana, all right? If I want to break this down and be a little bit more granular, I think what would really kind of get me going here would be, and yeah, it looks very, very similar, doesn't it, to ETH, it looks very similar to Sol, but this is the area, again, of key rejection, right? I'm going to label it up here with this. All right. So look at the contrast, right? And this is where color can be helpful. Those of you that know me know I don't really love color on the chart. It has been a while, Ozzy. My fault more than anything. We just had so much going on at the Nest, and very, very fortunate to be traveling, a fair bit to wonderful events at Dubai and a few other places. And then, as it is life throws its curveballs as well, but it's great to be back with you all. So as we see this here, right, this was the up move. Price again, look at the displacement, look at the aggression from sellers here. So we expect when price returns to here for that to reject lower. So, if we don't see that and we get that really nice big move above it and we get the chance to retest it, then this is the area that I'd be looking for longs, all right? I would obviously be aware that we've got some displacement moves down in here as well, but ultimately, if we're looking at this as a range, if we've deviated the range low, we've stepped back in again, we then shift and reclaim structure here, we've kind of got a lot of the ingredients we need for the recipe to be a success, all right? So that's how I would be looking at Solana here as well. Are you all for a couple of months? I hope for all the best reasons, mate. I really, really do. So that's where we are. Right? I just want to finish up on a few bits and pieces, guys, right? If you really take this game seriously, there's a few things that if you don't already, you really need to be keeping an eye on, even if you're just completely crypto focused. One of them is the Magnificent Seven, all right? That's Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. They call the Mag 7 because they make up the big hitters, or the biggest of big hitters, the biggest contributors to the major indexes, which are our NASDAQ and the S&P 500, which are shown here with the NQ futures contract and the ES futures contract as well. So these are markets I'm very heavily involved in almost every day. And they give us a really, really good correlation towards cryptocurrency, more based on the idea of whether we're in a risk-on or risk-off environment. Obviously, I have my, favorite tradable cryptos here as well. Always looking at things like Bitcoin dominance to see if that's kind of moving. But if you don't do this already, what I'd really recommend is really keeping an eye on things like the dollar index, the DXY. All right. Again, lay out your clear ranges like I've got on here. And then you're looking on here and saying to yourself, okay, are we seeing strength in the dollar or are we seeing weakness in the dollar? The correlations or the counter correlations are never exact, and they do fly in and out of relevance. But ultimately, what we're looking for here, we're saying while the dollar is typically historically weak, it's normally a good environment for risk. Now, we have seen that pay off, in terms of the NASDAQ, right? We haven't seen it pay off as much recently in terms of Bitcoin, right? So what we can see here is the NASDAQ in blue. So we can see, look at this, there's weakness in the dollar, grinding down, trying to kind of grind back up, still strength in the risk markets here. These are our equities. We did see this larger spike up here from the dollar. Again, look at the displacement, aggressive move higher. This is where we saw that corrective move here on the NASDAQ, S&P 500 as well. They're highly, highly correlated. Then as we see here, though, look at how the dollar retreats, but the NASDAQ moves higher. This is very tech-laden stocks. This is what's seen as the riskier end of the risk spectrum for investors, right? But we've not really seen that follow through. However, weakness in the dollar has historically been good for risk assets. So we do want to keep an eye on that, but make sure you understand your correlation differential. The VIX, which is one of my favorite instruments in terms of trading risk. We want to see this below 20. Again, if we add the NASDAQ on here, we can see how beautifully correlated this is. Bitcoin, again, has kind of been flowing in and out. But what we need to do here, in fact, look at the volatility on here. Basically, Bitcoin has been going down through here. But if you look at this, and I know this looks a little bit messy versus the candlesticks, but you want to see the VIX under 20, ideally. Yeah, risk assets tend to thrive in those environments. When you see these large spikes above it, as we saw here with Bitcoin, and then the follow-through effect here, as price moved back above, does put a little bit of pressure on risk assets. And why this is a little bit muted, we do have those underlying levels that allow us to get involved. Old age, man. I feel your pain, especially in an industry of such youth, exuberance, and technological based intellect, shall we say. Maybe not so much in common sense, which is obviously a dying art. If they did degrees in that, Aussie, I'm sure me and you would be right up there, mate. But it rarely pays the bills, unfortunately. So looking at that, what do we want? Low VIX, low DXY kind of paints the scene that we've got a decent risk on environment. I actually look at the Aussie JPY and New Zealand JPY. Again, you can get different drivers to that commodity-based currency like the Aussie, for example. But these are high-yielding currencies seen as risk currencies versus a very safe currency like the JPY. But we need to look at that at the moment because of the actions of the Bank of Japan, right? And I won't go into it in detail now, but it's all to do with the rate cuts. So as we're seeing here, what do we see? If we just take a snapshot, we are seeing strength here in the Magnificent Seven. The indexes are performing well. Look at this. It's grinding higher and grinding higher. The market does have an appetite for risk. It's almost not got an appetite for beta risk assets. It's almost not got an appetite for crypto at the moment. You know, we look at that in comparison with Bitcoin here, and we can just see that prices ultimately really has had some really, really aggressive sell-offs. And there's a number of reasons for that, all right? There is a lot of de-risking going on, but this is Bitcoin's price, just for example. Look how it was just grinding up beautifully here, aligned with risk markets. This is where we saw the take of the prior all-time high. And then we just saw the NASDAQ and technology stocks continue to grind up as this just came back down. Remembering that price is always in an auction, what we're saying to ourselves here is that, ultimately Bitcoin crypto wasn't considered value at that stage. And also there's growing concerns about the funding for AI stocks. There's a lot of talk about it being a bubble. For my thoughts on that, I don't think we're quite there yet. If you look at previous key bubbles, then key bubbles, but you look at previous bubbles, things like the Japanese housing market, Asian tigers, obviously the dot-com bubble, they were all fueled heavily by debt. That's not really been the case. It's been mainly capex spending on AI, but there are concerns from investors that as things start to slow down a little bit here, the uncertainty that crept into the market, the government shutdown obviously threw a spanner in the works as well. However, next year we need to remember there's a massive debt buyback coming in the US. Fiscal stimulus that means coming into the country, which is historically very good for risk markets. We've already got that fiscal stimulus across Europe. There are obviously huge geopolitical considerations that we need to factor in as well, but the markets do continue to drive on. What I would say is crypto for me at the moment boils down to this: it's not a market to be trying to catch bottoms, right? It's a market that if you can trade it intraday, there's some really good opportunities in there. But ultimately, what you're looking to do here is, if we go back to the Bitcoin chart, for example, right, what we're looking to do here isn't, absolutely buy the bottom. It's saying to ourselves, okay, well, when this is considered value again here, this is a decent buy. So again, if you're in spot, right, and I said this to people here, I added a fair amount of spot down here. I said this was a key area. This was the consolidation that led to this entire leg higher. And people say, yeah, but what if you break down from this? Well, I mean, then price is kind of moving back into the 70s and the 60s region in here. And I can't see price coming down below this. I don't normally say things like that, but, it's a broad area here. But if we started going down into the low 50s or the higher 40s, I think there would be big questions, when you've got a high up here in the mid 120s, that would be a very, very severe correction. So I just advise people to be cautious at the moment. You're going to see a lot of noise out on Twitter, Facebook, whatever other platforms, especially social platforms, with people saying, it's a generational buying opportunity, it's this, it's that, it's the other. What I would say is there's actually some really good people on there. There's an absolute load of garbage as well. Just validate people that you listen to and never let their decisions be yours. Ultimately, it's your capital, it's your risk, it's your life. And while the markets are doing things like that, don't let it put you down. Grab yourself TradingView, get yourself on replay mode, start looking at the market dynamics, saying to yourself, oh, okay, well, if this has interested you and you look back to this kind of section, you go, okay, well, what would I do here? Everybody's screaming at me that the market's over, everything's going to zero, yada, 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 yada. What do? Do I try and get involved in the market? Would you buy or would you sell this? Yeah, ask yourself those questions. Look left and say, okay, where's your downside targets? Well, actually, you've got some downside targets here. This low if price keeps coming in, but what's price actually done here? Remember, look at the lows, look at the highs, look at the key consolidations that lead to these driving moves, especially with displacement. Say to yourself, well, actually, you know what? Even though I believe overall the market's going to head lower, markets obviously don't go up and down in a straight line. So what do we see here? If you were a smart, mofo that was short from up here, well, you're going to want to take some profit somewhere. I'd argue here and here are really good places for that. When that happens and the aggressive sellers start to get absorbed by passive buyers here and they step into the market, we normally see these relief rallies. So where do we target? Look at these consolidations, yeah, that led to these aggressive moves lower. Look at the inefficiencies when price drives lower as well, and say to yourself, okay, maybe I'll actually take a few cheeky scalp shorts here, being very, very careful to cover, or get out of the positions quickly. But that's, for me, the direction. This is a FOMO short. Even if prices drops like a stone here, just watch it. Take it one candle at a time. What happened here? Okay, buyers started to step in here. Maybe look at a CVD. Okay, well, huge volume candle to the downside here. But ultimately, yes, while we did manage to get below this here, if we look to this low over here, we've got a large divergence here, a lower low here and a much higher low here. So we can see a little bit of strength in the market. Or even without that, just look at it and say to yourself, okay, well, if I wanted to hold this here, well, what do I want to do here? Well, I'd still want to be a buyer here drawing this higher, or I want to stay out of the market until we get one of our key areas engaged with, right? And you wait. Again, look, you can get some decent buying opportunities in here, believe me, on the lower time frames. I'll show you in a minute. But then we start to move up into these areas, right? And we're saying to ourselves, okay, we're here, we're up into the gap. We're now favoring short positions. You don't want to be long up here. It's not the place. You want to be long above here. Price obviously continues in, and the rest is history. But you then break that down onto a lower time frame, for example, something like the hourly, and you're saying to yourself, as you're holding these positions here, yeah, what did we say? As price comes in, starts to hold these areas, we're moving up, yeah, price, what do we see? This is where we see a good reclaim of this level. I like this move here because, look, small displacement move higher, but then you start to see the downside wicks here showing us a little bit of absorption. Set a bullish order block, bullish engulfing candle, nice opportunity to scalp along. As we move along the line here, we see it, we see price come in, okay, we see price reclaim this level, hold here. Yeah, we've got a pin bar candle. We see absorption to the lows, price potentially moving up. That one fails. We're patient. Yeah, expansion above here. Can we come in and hold this level? We do. Yeah, and again, look, we looked at this here, and if you put a volume profile over this, for example, and target something like a low volume node or a volume shelf, you can see here the lowest areas of volume are the areas that are supporting price, and that just happens to beautifully overlay with our bullish gap. Yeah. So as we look at that and price moves away, this is the opportunity that we get then to trade the market higher, even if you're waiting for a market recovery here, yeah, to step in. So don't waste the time, basically, is what I'm saying. Forex is a nightmare right now. You know what? A trader that I work really closely with, magnificent Forex trader, actually, just going full time now, has been trading the Aussie US and Euro US as well, which have been quite clean pairs. But Aussie's been really, really super clean. Depends on the time frame and that, right? But has been really, really nice intraday. So basically, what I'm saying, to stop myself jabbering on, because we really need to finish the show, is use this time to practice. If you've got this information and that in front of you, just look at it and say to yourself, right, well, where would I be active here? Yeah, if you're looking at this and you're saying to yourself, all right, well, what would I want to do here? Zoom out, yeah, we can get rid of all this anyway. Excuse me. And just look left. What's happened here? Well, this was the low we were talking about, right? So price has absolutely blitzed through that low. So we want to see price draw back to an area that we can look to be short. We don't want to be short here. Why not? Well, if we look left, we have this consolidation here, right? And even if you're just drawing it roughly around the whole area, yeah, just even if you're just allowing mainly for the bodies. But I would personally, what I do is I look for the down close or the bearish candles here that lead to the move higher. But I want to try and get the real consolidation in because, ultimately, if this is a range, price deviates the range, steps back inside, takes the low, and then expands higher. I want to allow for all of that. But as we look at this here, price is now driving into this area. So I wouldn't want to be short here. I want to be short from higher up. So, really consider that. The playbook here is short below this, yeah? Or we want to see price ideally step back above this here. So within here, if we look on the lower time frames, we can look for long positions, move yourself down to an executable time frame, say to yourself, okay, obviously ignore the big ugly blue lines on this. We'll look at it on the daily. But what are we looking for here? We're looking for that displacement. Yeah, we want to see those moves higher. We want to see those key aggressive moves, right? We see the first one here. Price sets this large expansion candle, leaving the gap between here. Price just dips into the gap here. We can trade it higher. Now, again, this is on an hourly chart. You could break that down. You could become even more granular with that if you wanted to. However, the key thing here is then saying to yourself, all right, if we've lost this area here, we see the breakdown, do we get the retest and can we then trade this shorter or do we get back above it? And obviously, we get the former. Price breaks down, can't get back above it. We start to lose the levels. And if you're worried about where or thinking about where you want to short these things from, potentially remember, if we're in a trend and we can see a really clear downwards movement here, we're looking for the bullish candles to be closed below, price to draw in, and then ultimately to sell off. And that's what we get all the way down here. Yeah. So close below, great selling opportunity. Close below, good selling opportunity. We hadn't closed below this area at that point, so I wouldn't take something so aggressively. Once again, if you're not shorting from these areas, don't FOMO into these here. Look left, see these key consolidations, especially the ones that lead to aggressive moves, and it can be a really good way to step in. Match key, apologies if I've murdered your name, mate. Looking at charts when QE is around the corner is a suicide mission. When somebody tells you you're entering a bear market, you should consider unfollowing them. Yeah, I think, look, I just think, I wouldn't say that per se. I understand your point. I think if you're looking for good traders or professional traders, they're not ones that are either perma bears or perma bulls. I think ultimately people have different ways and strategies to kind of evaluate the market. What you want to see are people, or if you're looking to learn from people, in my experience, you want to learn from people that have been in the space for a while, have proven track records, have either worked for key trading houses or people that post and show their trades. Education groups or calls groups that actually show all of their statistics in real time. That's what I would look at. But I do know what you're saying. Quantitative easing around the corner. I mean, I wouldn't say that looking at charts when QE is around the corner is that. Ultimately, most of the best traders I've ever known, and I'm talking about major fund and bank traders, are kind of overlaying fundamental news-based analysis and then using technical analysis to find good areas to get involved in the chart. But one thing that price action does always give us is a blueprint for what happened previously. So if you're looking at an area where buyers are super, super, super strong and we lose that area, you've got to be asking that question, okay, if those buyers aren't there now, they've probably stepped out of the market. And if they're not winning to protect that position, we could be going a lot lower. Absolutely. Yeah. I mean, quantitative easing is ultimately, one of the biggest bullish signals around. And I think, as we move in, I'm not sure if you were on the show earlier, we were just briefly touching upon, moving into the massive debt buyback next year, henceforth the QE conditions you were talking about. I think it's really, really hard not to be bullish for that, which is why I'm bullish for 2026. I just think we've had a lot of uncertainty in the markets this year, and I think from the government shutdown to the tariffs, everything like that, the risk bid has been heavily hit for a long time now. So there's the argument of overextension. I think the market needed this cool off, really. I'm not sure we've seen the full cooling off of the equities yet, but maybe they're just too strong. But yeah, for sure. I think ultimately it kind of goes into trying to sell high and buy low, doesn't it? Which sounds massively, it's a typical phrase that everybody says, oh yeah, sell high, buy low. But with context, it does really make sense. And we're low at the moment, right? So for me, I'm very much looking for the opportunities. Yes, Jack. Yes, right, brother. Awesome. I wish I spoke Polish, but I work with some amazing Polish people, and they try and teach me some of the language. So for you, I'll leave you with this terribly pronounced one, but hopefully something you find funny, which is Halushnium Bomushnium. And for the rest of you, I would just like to say have a fantastic day ahead. We'll be back with our live schedule a lot more consistently in the new year, but please do keep an eye on it. We've also got some great Christmas promos and that coming up, but just want to take this opportunity to wish you all a really, really wonderful Christmas, or festive season, whether you celebrate it or not. Spend some wonderful time with your family, with your friends, get that enrichment, get away from the charts. And what I would say is if the markets really aren't interesting you, then just remember that that's the point that you really want to be doubling down on your education. All right, legends. Thank you so much for joining me today. I appreciate every single one of you. Wishing you an amazing week ahead, and I look forward to seeing you all out there.